Nervos Network, CKB, ready to do another 400% surge powerhouse project. But today we're going to look at the technicals. The last two videos were bang on point. So now what we want to look at is what's likely to occur next. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of the Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I've been trading currencies for over 15 years now, but now focused exclusively on crypto. So let's dive straight in. Firstly, I do a lot of videos now. I normally launch one a day. I'm trying to do more. I'm doing a lot more in my private groups. We're doing a lot more in Telegram, just to make sure I can cover your coins in a timely fashion, because timing is key. So some of the videos, one I did on August 9th, this one down here, CKB, get set to do a 700%. So we did that over beginning of August. And then we did an update around towards the end of August called CKB pullback before price surge, right? So if we just look at what we said, we pegged this low back on August 9th, right? Using Elliott wave and Fibonacci, which is one of the best tools to read the psychology of the markets. It's not the fundamentals that drive the price, it's human psychology. The fundamentals help, but buying and selling pressure drives the price up and drives the price down. And what we're looking to do is measure the wave to see what's likely to occur next. We're not in a certainty game, we are in a probability game. So if you want to learn how to do this for yourself with all your portfolio, take my free Elliott Wave and Fibonacci masterclass, because I teach you how to do this. Then we did an update, because we pegged this low, we got it, and this was ahead of time. We said we should be expecting a nice move to the upside, and then price did surge and it went up. Look, it did a nice five-wave structure. We said, look, we should anticipate this high over here. If I can get a drawing tool out, just so it's really, really clear. Over here, we said we should anticipate the price to get to this point here and then do a correction, right? And we said this ahead of time. We want leading indicators. Yeah, it's all well and good seeing what the price did yesterday, but what is it likely to do tomorrow? And the probability. If you're looking for certainties, you're in the wrong game, but we can look at probabilities, which is very, very cool, very, very powerful. So let's dive into a live chart. So firstly, let's just, because it's really important, because we pegged this low, right? This low here was this video here, August 9th. This pink box, we said it looks like a wave 2 low, a complex correction, A, B, C, D, E of a wave 2 low. Again, if you're not used to Fibonacci and Elliott waves, take the free masterclass, because I covered, like in layman's terms, really simple terms, on how you can start to look for these identifiable patterns, which tend to unfold around 50% of the time. Then we said the market, if I go back in the video here, so the market is looking to come to this high, and look at this, it pegged this high over here now. So again, if we now go, the next video was here, and we said we should anticipate this high before we anticipate a correction, an ABC correction. But look, we said this ahead of time, clearly articulated on the 29th of August. You can go back and watch the video, ABC. It doesn't mean it's going to unfold that way. It just means it's highly probable. And when you're making business non-objective decisions on buying and selling, profit taking, etc., then you want to have it in a non-emotional way. And that's where technicals, which is the price action, can give us very, very, very valuable information. So in today's video, I said 400% surge. So what am I going on about? So if we can zoom in over here, if I can just delete these two, we got this nice five-wave structure. What comes after a nice five-wave structure? Typically an ABC, minimum of an ABC correction. But there's a caveat. There is a caveat. We need to be aware of this. Very, very, very important. A bit more advanced, but I think you're ready for it. Are you ready for it? Right, let's cover it. How long it takes this five-wave sequence to occur, which is a time factor, typically, more often than not, a correction, which we're referring to as this part here, typically takes a minimum of 50%. So roughly 50%, that's what this blue line is over here. This low down here, even though it looks like a very nice ABC structure, ABC structure, we would probably think this is going to be the low, and it's got a good probability of being the low, but we haven't reached this minimum time, which is a very, very, very important factor. And CKB has a bit of a history, going by the last correction of doing a more complex correction. Look at the last big move. Most corrections are A, B, C, but this did a D and an E, complex correction. So we're likely going to see something similar, but there's a few other key pieces of information that we can look at to help us. One is in the top left, this is my weekly chart, but the main factor I want to look at in my weekly chart is this momentum indicator. It's clearly still pointing down with the blue lines below the red. This blue line is called the fast line, and it's in this oversold zone, which is below this black line. So we can anticipate we're likely to get 1 or 2 more weeks to sideways to down. So what does that mean? Looking at this from a non-objective, non-emotional, non-bias, whether you love Nervos Network, whether you hate Nervos Network, or whether you're just purely speculating on buying and selling with the psychology of the market, we want to be as objective as we can when we're looking at price information, when we're making buying and selling decisions. So what's likely to occur is one of two scenarios. One of two scenarios. And I'm going to tell you which one I'm more leaning towards, but the information will tell us. The information will tell us. We're either going to get, over the next few days, 7 days or so, a correction where this low is not going to get taken out in terms of it will hold, and then we get a continuation of the trend. Yeah, that's scenario one. Scenario two is we actually get one final further leg down, a deeper correction, finishing off this whole bigger correction, this whole A, B, C, possibly a D and an E, and then get a continuation of the trend. And you might be thinking, wow, Jagir, okay, that's two scenarios. Which one is it likely to be? So again, we want non-emotional, mechanical information that we can go, right, what's going to help us make our decision? Well, today we don't even need to make the decision. We let the price tell us what's likely to happen. How do we do that? I'm going to tell you. Right? And if you haven't taken my free Elliott and Fibonacci masterclass, I'm telling you, I spent so much time trying to simplify what is very, very powerful information if used correctly. And even just knowing the basics is going to give you an edge on the market. So what we are going to do is this. This is what I'm suggesting you do. Is rather than trying to guess the market, is what we do is we wait 3 to 5 days, let this momentum, this is stochastics RSI. Don't worry about that, that's just jargon. What it basically shows us, this is important. Let me just show you this. Look at this low made here, right? Look how the blue and the red line tend to marry up down here. You see that? That gives us valuable information. And if we even zoom in over here, if we look at this recent low over here, if we can look at the momentum indicator, see how the blue line crosses over the red? The momentum just helps us to see where is the likely next low or high going to be, especially when they marry up quite nicely. And that's what we're looking at. So what we're going to say, what I'm saying is wait for the next momentum bullish reversal. We know the weekly is still pointing down. It might take 3 to 5, maybe 7 days. When the blue line crosses over the red, we literally look at where is the price. If the price is below this point, as in below this point, right, we go, it looks like a complex correction, A, B, C, D, E. If it makes its bullish reversal down here on the momentum, and the price has not exceeded this low down here, then it looks like it's more of a B, C correction, a move to the upside, and then a correction, a little correction, before we get a continuation, right? So if you're looking to buy for the first time or add to your position, then we can use the momentum, pattern, price, and some time analysis to help us make objective, high probability, not certain, high probability decisions, which means you have to have proper risk management, because we're not going to bet the house on this. We just know anything can happen, but we're always looking for the edge. But to finish on today, because CKB has got a huge, powerful following, And what I wanted to bring to your attention, which is some valuable information, is an hourly chart. We're looking at an hourly chart now. Now, what I want to do, I'm just going to get rid of these lines. You can actually say I don't want these to show on the hourly data, mainly because it's convoluting the chart. There's a few key facts I want to show you. If I can get rid of these. Yeah, we don't need it visible on the hourly. Okay, everything else is fine. All right, what other key information do we have? So just so we're clear, just so we're on the same page, this information over here, this over here, on the top right is our daily chart, is the same area down here on the hourly chart. Why am I showing you this way? It's just so that you know it's the same information, but on an hourly, we get to see the intricate moves in between. What I can see here is these look like overlapping waves, right? Where this wave is overlapping in here. And that is a clue to say this is more of a corrective structure, not an impulsive structure. So that would indicate to me, if I had to choose today out of option 1 and option 2, it would indicate to me that this part over here, you notice that I'm objective. We're not being emotional here. But I would say this part over here has a corrective wave structure. That's a clue. When we're looking for very objective information, that tells us a clue. And when there's a corrective structure, you should see a new low. You should see a new low. And that new low will probably look something like this. So my guess, going by today's information, is that we're going to see one more new low in the region of around 1 cent, 0.01, give or take, around that region, by, I did some time analysis earlier, by the 14th to the 15th of October. And why have I got that date? Well, basically, I've just looked at how long did these waves take to form. This one and this one. And I've just projected it forward from this date and this date. And this is what's given me some time analysis. And I've done some other factors as well. But the key bit of information is we just wait patiently. But now let's just go, hey, Gear. Yeah, but you said 400% price surge. Well, we just said 1 cent. We're likely to see a 1 cent zone. But on the macro picture, right, which we pegged, if we go back to the video, we saw this on the 9th of August. Look at this. This is so important because with Fibonacci and Elliott wave, you can see what's likely to happen in advance. So look at this down here. This was on the 9th of August that we pegged this low. And that price was it's around 0.05, 0.06, 0.07. And then the price did increase. It did increase to, let me just have a look. It did go to 0.02. It did a 4x. That was around the 3-4x, 3-400% move. It's a pretty reasonable, considerable move. And now we're looking for the next move. So what tends to happen after a microwave 1 and a wave 2? So if it does unfold like this, 1, 2, and we get this final leg down, either we don't break it or we do. That's not that important. What we're looking for is the next bullish daily momentum reversal, what we're looking at down here. And then what we should anticipate is a wave 3 of a wave 3. What? What's a wave 3 of a wave 3? Well, that's what I'm going to show you now. So if this is a wave 1, this macro wave 1, we're looking at bigger degrees and more micro degrees and intermediate degrees. And then we've got this complex wave 2. What should follow is a bullish, very bullish wave 3. That's what we're looking for, right? But now we want to get intricate over the next few weeks and next few months is this part here. I've done the measurements for you already. These are the two price zones. If we pulled back down to 1 cent, it's likely we should see 3 to 4 cents, right, over the next few weeks and months. By mid-November, definitely by the end of November is more than likely we should see 1 cent of CKB Nervos Network going up to around 4 cents, especially with all the great fundamentals that are happening. But ultimately, it's the buying and selling of Nervos Network token that drives the price. So let me know, what do you think? Do you think it's gonna the current low of over here? Let me just zoom back in. The current low of see what the price is. 0.0113, 0.0113. Is it going to hold, or will we see a slightly lower low of 0.01? You know, it's not that much. Percentage terms, it's significant. It's around 30-40% difference, right? And then in the grander scheme of things, you go, actually, it's not that much of a difference. So you want to be just prepared for this as well. Let's finish today on a quote. Let's finish on a quote from chapter 3. It's Confucius. He says, "It does not matter how slowly you go, as long as you do not stop." I'm telling you, take my free Elliott Fibonacci masterclass. It's in the link below. There is a learning curve, but I've broken it down so you can start identifying these patterns for yourself and start preparing ahead of the price movements. So when you see buying opportunities, you are buying before the train leaves the station. If you're trying to chase the train, it's hard work, it's emotional, and you tend to buy high and end up selling low. We want to buy low and end up selling high, where you can maximize your returns, minimize your risk, but also support the project if you're a fan of the project, but you can hold it and make good returns from it. So if you like today's video, like, subscribe, hit the bell notification, and I will see you very soon.